DW Africa Link.
Temu, Take a Lot, Amazon, Glovo, and Konga Pay. Ring any bells? These are major players in the world of e-commerce, connecting millions to goods, services, and information at the click of a button. For 28 years, a single rule has shaped how these platforms operate. Cross-border digital transmissions were exempt from duties. But that era has come to an end. With the moratorium now expired, countries are free to impose duties on cross-border transactions. The big question is, how will this shift affect businesses and consumers across the globe? That's what's coming up. This is Africa Link, the podcast that connects you to the stories that matter. And I am Adwoa Tenkoramaa Domena, your host for today.
Africa Link, every weekday here on DW.
Since 1998, the World Trade Organization, WTO's e-commerce moratorium has protected digital transmissions from customs duties. Now, this policy prevented countries from slapping extra charges on online sales and digitally delivered products, keeping your digital experience more affordable. Every 2 years, that moratorium was renewed until this year, 2026, when members failed to reach a consensus. The implications are global, but especially significant for Africa, where the e-commerce landscape is still taking shape. Now, companies must adapt to a reality where digital transactions may be taxed at the border, not just a physical border, but electronic border as well. What does this mean for Africa's e-commerce giants like Kenya, which is projected to have 40 million users by the end of 2026? To help us unpack these questions, we're joined by Benedicta Lasi. She's Executive Chairperson for the African Trade Chamber. We also have DW's Felix Maringa reporting from Nairobi. Welcome, Benedicta and Felix.
Thank you for having me.
Thank you for having me.
Benedicta, I don't know if you agree with me, but this moratorium we're talking about has almost been a ticking time bomb. I mean, the last renewal in 2024, we saw the difficulty with which it had to go through before it was passed. So for many people, this lack of, extension is not surprising. Is it to you?
No, it isn't at all. And I think that for the global economy and the recent developments when it comes to international trade, what we are seeing is that we have some sort of groupings or member states of the WTO that have not necessarily been keen on the extension of the moratorium. And so going into MC14, I was hoping that I would be surprised and we would have a lot more consensus around the issue. But clearly, we do not have, and the future, the coming years are one to really pay attention to.
Do we need this agreement in the first place?
It depends on how you're looking at it, and in terms of the timing of it, it's really a question of long-term benefits as opposed to the short-term benefits. The moratorium will certainly help us to continue to build the digital infrastructure on the continent and be able to trade in goods and services digitally without businesses having to worry so much about tariffs or customs duties. What a failure of having such a moratorium would mean would be that you would have companies or enterprises that depend on inputs being delivered digitally being affected, and that could itself affect the level of growth we would see in the digital services space. And so, yes, we need the moratorium. We need to have an extension of it, to have a better developed, robust system to be able to administer such a regime and have some certainty around the conversation of digital trade.
Very well. Let me bring in Felix at this point. Felix, you live in one country that is one of the fastest growing e-commerce countries in sub-Saharan Africa, Kenya. In fact, I mean, a look at the numbers says that the current e-commerce value in Kenya reached about 299.45 billion shillings. That's approximately 762 million US dollars as of 2024. So this is a big economy for Kenya. How have people been reacting to this, particularly people in the e-commerce sector?
Right. Thank you so much. I'll first start by saying that Kenya voted to keep the moratorium in place because there's a lot of digital products that Kenya has been exporting to at regional level and internationally. At regional level, Kenya has, for instance, exported one of its most significant financial services, which is M-Pesa, which is currently being used in Kenya and Ethiopia. The markets have been growing, the numbers have been growing. We're looking at a possible subscriber base of 50 million plus people who use these services. So what this means for them with the moratorium now not renewed, it means that Kenyans get to pay more for the services. They get to pay more in terms of transactions. They get to pay a little bit higher in terms of some of the services that they want to experience, whether it's mobile money, whether it's streaming devices. For instance, a lot of Kenyans get to use Netflix, Spotify, and other streaming services. So it means with this tax now in place, they'll get to pay a little bit higher. It also means that for us as the people in Kenya, then even the gig economy, people who work online, in an economy that joblessness is very high, people have resorted to looking for jobs online. They've resorted to dealing with international clients. So what it means to now the person on the ground is that they get to either pay more for the things that we are importing, or for the international clients, then either the workload will reduce or the earnings could significantly reduce because now this tax is imposed. And what it means is people will not be able to put food on the table, or they'll have to scale down on their livelihoods. Some of the people support more than 3-4 family members. So it will mean that these family members get to strain. And when it comes down to the common person on the ground, it means life becomes a little bit difficult.
We'll come back into that shortly, but Benedicta, let me bring you in at this point. List for us what really are e-commerce platforms in Africa and what is not. Because for instance, Netflix, I'm not sure where to place it. I know it's a subscription-based video streaming platform and not traditionally an e-commerce company. What falls under this WTO e-commerce structure that we are talking about? Which kind of businesses?
Okay, so you are talking about fintech companies. You would have fintech companies heavily relying on cloud computing, software engineering, international APIs, digital payment gateways, cyber security infrastructure. So this is when you look at the financial technology ecosystem. These are all platforms that would be subjected to the tariff. Now, if you look at the creative industry as well, so graphic designers, so be providing that service across borders, it's also subject to this. You also have digital marketers software developers, online educational platforms that are impacted by this. So let me put it this way, an example. A Ghanaian startup looking to serve local customers may rely on, let's say, an American cloud server or a cybersecurity software from Europe. They might also employ developers from let's say India, or use payments services like Stripe. All of this are subject to this agreement. And so when you're streaming online, the question you ask, the consumption of online services as well also attracts that.
You have companies like Temu, which is now making a lot of waves, selling platform, Take a Lot, from South Africa. You have Amazon, Konga Pay, for instance, in Nigeria. Are all these classified as e-commerce businesses?
Yes, they are. They are classified as e-commerce businesses, and without the moratorium, they would be subjected to digital services tax.
For the consumer, for I who is using these platforms, what impact, does this have on me?
One, there are country by country implications. So for some consumers, it would mean that you have a much more fragmented market. And so service providers in specific jurisdictions would have specific tax regimes or tariff regimes that apply to them. And so if you are looking to order in something from Kenya and you are in Senegal, the question is you need to basically be abreast with what the implications of that digital commerce means for you. It also has implications due to the fact that most of the countries would have their own either bilateral or multilateral engagements. But what is key to notice is that if this agreement kicks in, what would happen is that you would have companies that rely on digital trade for their inputs being affected the most, because you would have them having to have inputs taxed before production. And so it would increase significantly the cost of producing anything. And then on the sales side as well, the tariffs would apply to the sales side. And so on both sides, you would either have the company absorbing the cost or passing it on to consumers, or you might also have government sort of put in place fiscal regimes that support the supporting of digital trade.
Felix, what other options are Kenyan e-commerce businesses looking at the moment?
All right, that's a good question. So I think some of the options that the Kenyan e-commerce companies can look at is a shift towards the local and regional markets first. So that means focus on Kenya and some of our neighboring countries within the region, which is Uganda, Tanzania, Ethiopia, just the countries around the region. And we have some platforms that are positioned to do this. We have Jumia that still sells to both the Kenyan market and the regional market. So there could be more focus on that. And that would mean people stop looking at now external markets like Amazon, Shopify, etc., that have their base elsewhere apart from the region. And then there's also the possibility that the local e-commerce companies could use, in Kenya, there's something they say, buy Kenya, build Kenya. So it could be more like something like buy within the region or buy Africa, build Africa. Because to be honest, platforms like M-Pesa have shifted how money is transferred globally and how people trade globally. So it's for us to use now local platforms, it would mean that there'll be more trade on the local platforms, there'll be more interaction within the local platforms. Sometimes there's the discussion around local platforms may not necessarily meet international platforms or global, they may not be able to compete at global level. But at the moment, if you're locked out of using whatever you'd use at a global scale, then you come back home.
Right. Benedicta, there are people who are arguing, developing countries who are arguing that the moratorium limited the ability to take revenue, for instance. For which reason they were opposing these. What's that all about?
For some countries, it is a decision between the immediate revenue generation as a product of fiscal policy, being able to take up taxes or tariffs from digital trade. Yes, they might have systems or robust systems that allow them to benefit from this in the short term and long term, perhaps. But for emerging economies like Ghana or Kenya or Senegal or Africa, for that matter, countries in Africa, we are still at the consuming end of digital trade, and so we need to be able to bear in mind that until we have a regime that supports development of digital trade, right? Because the more you put tariffs or customs duties on digital trade, the lesser it would be attractive for consumers and also businesses looking to going into that particular area. And so we have to begin to look at what is the vision of our countries when it comes to digital trade. Are we looking to increase the volume of digital trade? Do we think that given the logistical challenges, online platforms and the whole digital trade ecosystem is something that we need to build? If that is the case, which we have all agreed that yes, as a continent, we need digital trade, and you have countries like Kenya really advancing in this area and putting in place frameworks and policies to sort of drive that particular industry. Once we have that understanding, then the question is not necessarily whether we are getting revenue. It's really how do we build that industry to benefit the country or the continent in the long term. And so yes, short term, we might be losing some tariff revenues, but in the long term, building this ecosystem or industry inures more to countries and to citizens than basically putting in place tariff regimes that immediately tax the system. What it would mean is that you're basically trying to take the seed that is planted. We are not waiting for the seed to grow and bear fruits before we tax it. We are taxing it at the point of planting, which then hinders the growth of the sector.
Very well. You make quite some interesting points, and there are some questions that you think we should begin asking ourselves. Felix, let me just ask you my last question while we wait for Benedicta. Do you think that this development could push the average Kenyan towards going to demanding physical services instead of using digital services? Is there any risk like that, Felix?
Yes, definitely. People could move from ordering things digitally, and trade could go back to what people were used to, just physical trade. There's a physical shop, people traveling from one country to another to get the different products that they need, and to be able to go around their trade. And e-commerce may slightly get a hit. But what has happened, even in history, has been that anytime that people encounter challenges, they come up with solutions. So, for instance, during COVID-19, people were used to a lot of physical, just before COVID-19, sorry, now force people to ask them the obvious question: is it becoming too costly to trade on these platforms? And if the answer will be yes, then people will go to other methods of trying to find solutions. And what has been happening in Kenya has been you're finding shops are selling to you via WhatsApp. You get to pick on a particular product, then you pay on delivery, and there's a person who's coming to your door. They come with 1, 2, 3 products that you had seen online. You select, you pick whatever you wanted, and you pay for it. People are also selling via text messages. So people will have some of these particular ways of doing business to just survive. And something else that people are doing, they're selling a lot of on Instagram, on TikTok shops, and they're also running very small online stores that address particular niche markets. I think something else that we might see happening is that there'll be fewer e-commerce platforms, but people will be trying as much as possible to ensure that trade continues.
Definitely. Thank you so much, Felix. Benedicta, you have the final words. Where lies the solution?
So the solution lies on the continent and in our hands, in the hands of our governments, and the common framework being developed, economic framework being developed under the African Continental Free Trade Area. I think that this presents a very big opportunity for the AFCFTA Secretariat working with African countries. They're already building a digital rules for digital trade cooperation, and those protocols on digital trade, the AFTA protocol on digital trade, actually provides us with an opportunity to create our own predictable internal digital market. And once we are able to implement this properly, Africa could actually establish tariff-free digital trade across African borders. We can also harmonize our digital regulations across the different countries. We could also have coordinated taxation regimes or frameworks that ensures that there is that limited fragmentation, and there's also predictability in terms of what the taxation framework would be. And we could also have a unified standard for digital commerce, which then assists with businesses trading through digital trade to adopt the various standards and not having to be subjected to the varied compliance issues across borders.
Very well. Thank you so much, Benedicta Lasi. She's Executive Chairperson for the African Trade Chamber. Earlier, you heard Felix Maringa, DW correspondent, speaking to us from Nairobi, Kenya. Gentlemen and lady, thank you so much for your time.
Thank you very much for having us.
Get the stories that are shaping the continent here on Africa Link.
In sub-Saharan Africa, internet usage is steadily on the rise, now reaching around 36%, up from just 25% in 2019, according to the World Bank. Now, experts agree e-commerce is here to stay, and with the new hurdles come opportunities for fresh innovations. So how can small businesses or small and medium-sized enterprises in Africa adapt and thrive in a rapidly evolving digital marketplace, especially now that the moratorium is gone? Share your thoughts with us on our DW Africa Facebook and TikTok pages. Listen to this podcast on Spotify or wherever you get your podcast. And don't forget to subscribe to our DW Africa YouTube channel so you never miss an episode. This show was co-produced and edited by Isaac Mugabe. And I am Adwoa Tenkoramaa Domena. Thank you for listening.
DW, made for minds.